Williamson County real estate is changing right underneath people's feet, and whether you agree with these shifts or not, if you own property here, plan to buy here, or are thinking about relocating to this area, you need to understand what's happening. I'm Tim Houck, and you're watching the Houck Group channel, where we don't just talk about the beautiful parts of Williamson County, and there's a lot of them, but also the policies, the costs, and the changes that are actively shaping what this market is becoming. A while back, I did a video on things affecting Williamson County homeowners, and the response was pretty overwhelming. And honestly, since then, the conversation has only gotten more relevant. Tennessee is moving fast right now when it comes to growth, infrastructure, taxation, and land use. Some people think that the changes coming are necessary and overdue. Other people think the pace of development is beginning to threaten the very character that made people want to move here in the first place. Either way, if you own a home here, plan to buy here, or hope to stay here long term, these things matter. Today, I'm breaking down the 5 laws and policy shifts that are quietly reshaping Williamson County real estate right now. And more importantly, what they actually mean for you in the real world. Shift number 1, Tennessee's growth pressure and short-term rental regulation. The first one is the most immediately felt across the county right now, and it sits at the intersection of housing supply, neighborhood character, and the booming short-term rental economy. And that is the ongoing battle over short-term rental regulation in Williamson County and its municipalities. As Williamson County has become one of the most desirable destinations in the entire Southeast for both relocation buyers and visitors drawn to Franklin's downtown, Leapers Fork, and the broader Nashville experience, the short-term rental market has exploded. Platforms like Airbnb and VRBO have made it genuinely profitable for property owners to take homes off the long-term rental market, convert those into short-term income properties. Now, the tension that it creates is real. Franklin, Brentwood, and other municipalities within the county have been actively tightening their short-term rental ordinances, restricting where they're permitted, requiring owner occupancy in some zones, capping the number of permitted nights, and increasing enforcement of existing rules. For property owners who purchase with short-term rental income as part of their financial model, these regulatory shifts can materially affect the return on investment they expected. For neighborhoods that have watched the character of their streets change as investor-owned rentals cycled in and out of houses that used to be family homes, the regulations feel long overdue. Here's the real estate reality. If you're buying in Williamson County with any intention of operating a short-term rental, you cannot assume the rules that exist today will be the rules that exist in 2 years. This is a fast-moving regulatory environment, and due diligence on the specific municipality and zoning classification of any property you're considering is absolutely non-negotiable. Do not, I repeat, do not skip that step. Shift number 2. Property tax reappraisal and what it's doing to long-term homeowners. Number 2 isn't brand new, but the real-world impact of it is being felt right away in a way that is generally painful for a lot of families. And that is Tennessee's property tax reappraisal cycle and what it has meant for Williamson County homeowners who have been here for a long time. Tennessee conducts property reappraisals on a cycle, and given the dramatic appreciation Williamson County has experienced over the last several years, median property values rising over 11% in a single year according to Census Bureau data, the gap between what long-term earners were being taxed on and what their properties are actually worth has grown enormous. When reappraisals catch up to market reality, the tax bills that arrive in the mail can be genuinely shocking for families who bought their homes 15 or 20 years ago at a fraction of the current values. Now, Tennessee does have some protections and a relatively low tax rate compared to many states, and that is genuine advantage this market has over places like California, Illinois, or New York. But the rate is only part of the equation. When the assessed value doubles or triples, even a low rate produces a meaningfully higher annual bill. And for fixed income retirees, long-term homeowners on stable incomes, and families who brought in Williamson County before the growth wave hit, these reappraisals have created real financial pressure. There are programs available for elderly and disabled homeowners that provide some relief, and I'd strongly encourage anyone in that situation to look into what Williamson County offers. But the broader point is this: the appreciation that has been so good for homeowners as a wealth building story has a flip side when it comes time for the county to recalibrate what it's collecting. Understanding where you stand in that cycle and planning accordingly is something every Williamson County property owner should be doing right now. Shift number 3. The insurance landscape is changing and not enough people are talking about it. Number 3 is one that doesn't get nearly enough attention in conversations about Middle Tennessee real estate. And it may quietly be one of the most significantly affordability factors in the market right now. And that is the shifting insurance environment in Williamson County. Tennessee is not California, nor Louisiana or other states that have some some challenging insurance issues. We're not seeing the mass insurer exodus that has devastated coastal markets. But that does not mean the insurance picture here is static or comfortable, because it isn't. Williamson County has experienced significant flooding events, which the 2010 flood remains one of the most devastating natural disasters in Tennessee history. And flood risk is in consideration for properties near the Harpeth River and its tributaries throughout the county. Beyond flooding, the general hardening of the national insurance market has driven premiums upward across the board. And homeowners who haven't shopped their coverage recently are in many cases significantly underinsured relative to current replacement costs. Here's what I see happening in this market that concerns me. Buyers are understandably focused on mortgage rate, purchase price, and property taxes. Insurance is often the last line item they think about until the quote comes back and is dramatically higher than they budgeted for. And for properties in flood zones, older homes with aging systems, or larger estate properties where replacement cost coverage is generally expensive, that insurance number can materially change the economics of a purchase. My strong advice, and I give this to every buyer I work with: get an insurance quote early in the process, not at the end. Before you're emotionally committed to a property, understand what it's going to cost to insure it properly. And if you're a current homeowner, do an annual review of your coverage relative to what it would actually cost to rebuild your home at today's construction costs. Those two numbers are further apart than most people realize right now. Shift number 4. Tennessee's land use and density debate is coming to Williamson County. Number 4, and this is the one that is going to define a lot of conversation in this county over the next decade: Tennessee's evolving approach to housing density and land use, and how that pressures landing specifically in Williamson County. Tennessee has historically been a strong home rule state, meaning local governments have had significant authority over zoning and development decisions. But as the state's population growth has accelerated, Nashville and its surrounding counties have been among the fastest growing metro areas in the entire country. There is increasing pressure at the state level to encourage more housing production, reduce local barriers to development. What this means practically for Williamson County is a tension that is already very visible if you're paying attention. Municipalities like Franklin have worked hard to manage growth in a way that preserves community character, limiting density, protecting agricultural land, maintaining the rolling pastoral landscape that defines western Williamson County. But the demand pressure coming into this market is relentless, and the economic incentive for landowners and developers to push for higher density approvals is enormous. We are already seeing this play out in real time. Proposed developments that would have been unthinkable in certain corridors 5 years ago are now generating serious debate at planning commission meetings. Infrastructure, roads, schools, water systems is struggling to keep pace with the rooftops already approved, let alone those in the pipeline. And the communities that move to Williamson County specifically because of its open space, low density, and small town character are increasingly vocal about what they see as a threat to everything that made them choose this place. I'll give you my honest take. Growth is not inherently bad. Williamson County's growth has created extraordinary wealth for property owners throughout and brought world-class amenities to a community I feel truly deserves them. But growth without infrastructure investment and thoughtful planning is a different thing entirely. The decisions being made in planning commissions and county commission chambers right now will determine what Williamson County looks and feels like in 2035. That's not an exaggeration. Pay attention to those decisions. Shift number 5. Infrastructure costs are being passed to buyers and developers. Now, number 5 sounds technical until you realize it directly affects what you pay for a home. And that is the escalating costs of infrastructure, impact fees, and development charges in Williamson County, and how those costs are flowing through to buyers. As the county has grown, the cost of expanding roads, schools, water and sewer systems, and public services to serve that growth has become a significant financial challenge. Williamson County has some of the most sought-after public schools in the state. That is a major driver of demand. But those schools cost money to build and staff, and that money has to come from somewhere. One of the primary mechanisms is development impact fees, charges levied on new construction to help fund the public infrastructure that growth requires. In Williamson County, these fees have been increasing, and they are not small numbers. When you add up school impact fees, road fees, utility connection costs, and other development charges, The cumulative cost on a new construction home can run into the tens of thousands of dollars. Costs that builders factor directly into their base pricing and that ultimately lands on the buyer. This is one of the reasons that new construction in Williamson County has become increasingly expensive even as construction costs themselves have fluctuated. It's also one of the reasons that resale homes, particularly those built before the most recent rounds of impact fee increases, can sometimes represent better value per square foot than comparable new construction. Understanding the full cost stack on any construction purchase, including what fees are included and what has already been paid, is something every buyer should be doing due diligence on. Here's the broader point. Williamson County's infrastructure investment challenge is real and it isn't going away. The fees will likely to continue to increase as the county works to keep pace with growth. For buyers, that means understanding how those costs are priced into what you're being offered. For homeowners, it means recognizing that the public investment being made in the schools and infrastructure is one of the structural reasons your property values have held up the way they have. Okay, that was a lot, and I get it. The rules keep evolving. Taxes change, insurance changes, land use decisions happen faster than most people can track, and for a lot of Williamson County homeowners, it can feel harder than ever to have a clear picture of where this market is headed. Some people see these shifts as the natural growing pains of a community that has become one of the most desirable places to live in the entire country. Others feel that the pace and character of change is beginning to threaten the very things that made Williamson County special in the first place. What I know for certain is this: these are no longer abstract conversations. These shifts are directly impacting what homes cost, what they cost to own, how they can be used, and what this community is going to look 10 years from now. And the homeowners, buyers, sellers who understand them are the ones who make better decisions. So here's the question of the day. Which of these 5 shifts do you think will have the biggest impact on Williamson County over the next decade? Is it short-term rental regulation, the reappraisal cycle, the insurance market, the density debate, or the infrastructure cost conversation? Drop it into the comments. I genuinely want to know where you stand or what you think. And if you're thinking about buying, selling, or relocating to Williamson County, I want to have a real conversation about what all of this means for your specific situation, reach out to me directly. Call or text 615-212-8996 or head to musiccitysold.com. My team and I navigate these conversations every single day, and we'd love to help you make a move that you'll feel good about for a long time. If there's another policy, law, or market shift you want me to break down in the future video, drop it in the comments below. Hit the like button, subscribe if you're not already on the channel, and we'll see you on the next one.